This is Michael Prestwich. I'm president and founder of ImagiSOFT. In today's webinar, I will show you how to help your clients leave their children and grandchildren an income stream instead of a tax bill. On our website, we feel it is important for you to read what experiences our customers are having with our software. Here is what Jeff Henson had to say about our Stretch IRA software. Separate yourself from the masses. In my practice, I work primarily with qualified money. I illustrate the multi-generational or stretch concept in almost every interview, no matter what their intention, simply because it sells and it opens a nice dialogue every time. A good example of this happened to me last month, where I was competing with another advisor on a $1.2 million sale and who happened to be illustrating the very same product, only I got the business because I showed this concept. Jeff knows that people buy not a product, but what that product can do and how it can benefit them. And he showed them the benefits by using the stretch concept. I have been in this business for over 35 years, and I believe anyone who illustrates this concept correctly will make many more sales, period. Showing people how to create a lasting legacy and educating them about the possible tax traps from their least favorite uncle, Uncle Sam, is a story that every one of your potential clients should be hearing. Believe me, it will turn many more of your interviews into clients. Top-notch software and customer service is second to none. Great job, ImagiSOFT. We're very proud to have reviews like that and customers like Jeff. To demonstrate the financial legacy, let me tell you the story of Sarah Singleton, who's age 67, and the special relationship she has with Bridget Smith, her granddaughter. Sarah has $1 million in a 401k plan. Her plan is to live on the minimum amount from the 401k plan, and then after she passes on, leave the balance to Bridget. Here is a sample interview based on the output from the Stretch IRA software. Sarah, as I understand it, you have $1 million, you're age 67, it's in your 401k plan, and assuming a 5% return, this is approximately what you would expect to happen with your 401k. You don't have to start taking money out, as you're aware, until age 70 and a half, so you'll earn $50,000 a year until age 70, and then you'll start taking the required minimum distribution, which will increase every year. And I think you told me your life expectancy was somewhere around age 90. That's when your mother passed away. And at age 90, when you pass away, there's $1 million or a little bit more still left in the 401k plan, which you plan to give to Bridget. As you can see, you will have taken out $1.3 million during your lifetime. You still have the whole 401k left. It's a beautiful concept, isn't it? There's only one problem. The custodial agreement of your 401k plan isn't flexible enough to allow Bridget to take over your retirement plan. Bridget never worked for this company. They don't want to pay the expenses and the management fees to give it to Bridget. So what they typically will do is give her a lump sum distribution. Now, Bridget's 28 years old, a smart young lady, maybe graduated from college, but can you imagine having a large financial institution call Bridget and say, okay, I understand you're the beneficiary of your grandmother's 401k. We got some money to send you. Where should we send you a check? And what's going to happen? She gets $1 million at the end of the year. She gets a tax bill from the IRS, $379,000. That's the top tax bracket, the same tax bracket that Warren Buffett is in. Can you imagine what's a 28-year-old going to do with a large amount of money like that and a large tax bill? They don't have the maturity at that age to know what to do with that kind of money. Obviously, there's $663,000 left, but she's looking for places to invest it, where to put it, maybe spend it, maybe buy a new car. Who knows? it just goes away. Is that really what you want for poor Bridget at age 28? Look at the numbers on the right. What if we could turn this into an income stream spread over her lifetime? You can see the compound effect. Would you rather have her get $663,000 of after-tax money in a lump sum, or would you rather have her get $4.1 million in after-tax money over her lifetime? I think you know the answer. Let's look at the legacy that you could leave Bridget. What if we could just have her inherit that $1 million and have her take out $18,000 that first year? They'd send her $1,500 per month. Then at age 29, they'd send her another little bit more than $1,500 per month. It starts to increase each and every year. As you can see, the account balance increases each and every year. She takes out the minimum, just like you're doing. And as she gains maturity, she lives on this budget. She doesn't ever dip into the $1 million because it's going to cause her a large tax burden. And the income increases year after year after year. Look over to the right when she's 56. She's got $2 million in there, and she's getting $6,000 a month. And then a few years later, $7,000 a month. She has $2 million. It continues to grow, and she receives money all the way till age 83, when the required minimum distribution means she has to liquidate it. But look at the amounts that she gets over her lifetime. The total distributions she receives are $5.6 million. Amazing. Which is a better plan, for her to take that money in a lump sum and have to pay the large income taxes, pay Uncle Sam, or to stretch it over her own lifetime and receive that legacy? How long do you think she'll remember this? I mean, look at the legacy that is building here. She'll remember her grandmother in a very special way for the rest of her life. Sarah, you seem enthusiastic about providing a financial legacy for your granddaughter. You realize that your current account cannot accomplish this, correct? Well, the first thing we need to do is for you to find a financial advisor who understands how to accomplish this and who has a relationship with companies that have financial products that can carry out your wishes for the next 100 years. If I can show you a company who has the strength and integrity to back up the design of their products, is there any reason that we can't do business? Good. I appreciate your confidence in me. The second thing we need to do is to select a product that is safe. I don't know if you've heard about Benjamin Franklin's financial legacy. Clear back in 1790, he left $4,000 to the city of Philadelphia. He wanted it to go for 200 years. In 1990, this fund had grown to $1.5 million. Now that's a modest 3% return. Franklin understood the relationship between time, money, and compound interest, but he also knew about safety. He didn't put it in something crazy and look for big, high returns. 3% did the job. Now I've shown you something at 5%. That's a little bit aggressive for a long period of time that we're talking about. The product that I am recommending is called a fixed indexed annuity. Here is a ledger for the most recent 10-year period. If you look at these numbers on the account value and compare them to the Stretch IRA illustration that I showed you earlier, you'll see that these exceed those numbers slightly. It has the potential of getting a 5% return based on the most recent 10-year calendar period. Now there's also a page that shows the best 10-year period in the last 20 and the worst 10-year period in the last 20. And obviously the best is higher than this and the worst is lower than this. There's also a page of guarantees, and that's perhaps the most important page. Is if we're talking about 100 years in the future, it's good for you to know that it can never lose money. The worst it can do is 0% interest, regardless of what happens in the future. And the company has the financial strength and security to last 100 years so that you can do like Benjamin Franklin and carry out this legacy. In a nutshell, this is how financial advisors use our Stretch IRA software to transfer $1 million or more per month into accounts that they control. Our software is product neutral. I demonstrated a fixed indexed annuity product for a company for which I am licensed, but the Stretch IRA software also can generate a FINRA approved report for investment products. If you are a financial advisor who is interested in joining the host of successful producers who is using our software, go to ImagiSOFT.com. Read some of the Trustpilot reviews. Click the multi-generational or Stretch IRA concept link. Watch the training videos. Most importantly, purchase the software. Make a commitment to show a sample illustration to at least one IRA holder per week. Watch your income soar as you use this concept. If you need the names of insurance companies who have products that work well with the Stretch concept or sources where you can get additional training, I will give you this information, but only if you are a subscriber to our software. Click the link. It's only $400 per year. Remember what Jeff Henson said? He took a $1.2 million sale away from an agent who sold the exact same product that he did. The difference was our software. Invest $400 in your future now. Thank you very much for your consideration.